What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Meta platforms.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up on.
And on today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that might drive the price of this company. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here, right after they had this harsh movement to the downside, right after their earnings report, and it wasn't the best earnings report for this company. And definitely this asset is on the free fall. If you switch to monthly time frame, you can see that this asset has harsh movement to the downside from its highest point at $385 in the middle of 2021 till present day, and as you can see, it doesn't have major retracements. So definitely it is a free fall and it scares a lot of investors. And let me show you their price action, the most recent price action. As you can see right here, we also had this decrease in its price with the decrease in volume. And I have to say that it is not the best sign from the technical standpoint. But everything that is related to the technical analysis I will show you in just several minutes. And for now, let's continue with the fundamental news. We have to find out whether or not this company has a major news that might drive the price of its stock higher. And let me show you first of all this article. On CNBC.com we have this article that was published on November the 3rd. And it's titled, Facebook parent company Meta is now the worst performer in the S&P 500 this year. And let me quote you only the key points. Meta is at the bottom of the S&P, trailing Alliant Technology, Generac Holdings, SVB Financial Group and March Group. Meta shares are down roughly 73% over the past year. Investors appear concerned about Meta's expensive bet on the metaverse. And in my opinion, this is one of the major reasons why Meta is experiencing its bearish pressure. And I have to say that, let me show you this article first of all. This article was published on the New York Times and it's titled My Sad, Lonely, Expensive Adventures in Zuckerberg's VR. And it was published on November the 4th by Farhat Manjoo. And the main idea of this article is that the metaverse by itself is quite boring startup because it doesn't have enough people to work there, to chill there and basically to be there. And one of the reasons probably is the very expensive headset, VR headset. And for now, Meta Quest Pro costs about $1,500, and definitely it is out of the budget of the majority of people, and the flow of these ordinary people might increase the numbers of the metaverse, but they cannot afford these expensive headsets. And on the other hand, I have to say that metaverse doesn't have enough entertainments right now, and it doesn't make sense with this type of competitors like PS5 or Xbox. And definitely because of this, metaverse is burning a lot of money, and that's why they have quite weak earnings reports. On top of that, at the very beginning of this year, I made a video and I mentioned on this video that Metaverse is losing its rating on Glassdoor. And let me show you this information. This is the best places to work of 2022, and this rating was made at the very beginning of this year. And right here you can see that Metaverse is on the 47th place, and previously it was about 36 rows higher. And this means they lost a lot of positions. And I have to say that right now, if we will take a look on their LinkedIn webpage, you can see that on 122.76 thousand employees, they have about 1,100 job openings. And it is less than 1%. To be precise, it is 0.9% of job openings compared to the existing positions. If we compare it with the Amazon, they have almost 3% of job openings compared to their existing employees. Even Twitter has about the same ratio in between 233 job openings and about 8,000 employees. This means even Twitter, with its latest firings, are above the metaverse, and this means metaverse is still experiencing fundamental problems, and they cannot expand, in my opinion, because to make something new they have to acquire more people, new people, and they have to do it consistently. So, and let me show you another article that is relatively bullish. It was published on November the 4th, and it's titled "Meta's ad business is doing better than you think." And key points are following. The headwinds facing the ad business are mostly temporary. Meta's stock is cheap based on traditional metrics, and I completely agree with this statement. Reality Labs remains a wild card and could delay a recovery in the stock price. And the main idea of this article is that the advertisement business is not so weak, and they are experiencing just temporary problems. But all in all, let me quote you this. Is Meta stock a buy? And despite of quite good fundamental data that price to earnings ratio is less than 10, the author says that the recovery might start only in 2024 at the earliest. With that said, investors are best waiting on the sidelines for now, as financial results seem likely to get worse before they get better. And they have a forecast that they won't recover for at least Q3 2023, and this means you have to be very cautious with your long-term position with Meta. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, I have to say that if we will take a look on indicators and if we switch to 4 hours time frame, as you can see right here, this asset according to RSI was extremely undervalued, but right now even on a 4 hours time frame it is on the neutral territory. It is closer to the oversold territory, but it is not yet there, and this means we have another potential leg to the downside that will hit probably the round number of $80. And depending on this price action, if you want to catch the bounce, and I have to say the bounce of this asset should be massive, because if we will take a look on a monthly time frame, and you have to remember that each candle represents 1 month of its price action, and on a monthly time frame we don't have major retracements. This means if you want to catch the next movement to the upside, at least a bounce, you can accumulate your position all the way down, and depending on the lowest point, let's assume that we will hit about $80 mark, we might see a bounce to at least $150 price point, and it implies, let me show you, it implies about 88% of potential profit, but in a matter of several months. If you are comfortable enough and if you are risk tolerant enough, you can accumulate all the way down to the $80 mark, and then you will be able to catch this bounce. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium